FXN Mentoring, what's up, guys? Welcome back to Trading with Market Makers, and welcome to week 8. So, as we always start off a new week, let's go ahead and let's let's have some things to keep in mind. So, the first thing is from last week is to take your time backtesting. There is no rush to this process. All right, this is the process that you actually don't want to rush. The more that you rush it, the less effective, essentially, that it's going to be. So take your time with it. All right, take your time with it. Second is don't make any changes to your plan until you have at least 100 trades recorded. Okay? So no changes to the plan until you have at least 100 trades recorded. Once you do have 100 trades recorded, your winning percentage should be close to about 70%, or it should be above it. So you should be 70% or higher after 100 trades. If for some reason you're not above 70% or nowhere close to 70%, we have to adjust or make adjustments to that plan. Or we really have to go into your losses and see why the losses were there to begin with. Because there's something is not correct. Third thing is, or fourth thing I should say, is look at the exit reason that you put in to the journal on all of your losses. So after you're done with 100 trades, look at the exit reason for your losses. Do you see the same thing over again? So essentially, is there something in common? What do all your losses have in common? Right? If you look at your losses for your exit reason, is it because it said, you put in there stop hunt continued, stop hunt continued, stop hunt continued. If you see something like that in your exit reason over and over and over again, and like the majority of your losses are because of that, that means that you're seeing the wrong pattern, or you're seeing the first leg wrong, is what that means. Okay? Because clearly they're not done stop hunting if that's the reason that you got taken out of the trade. So you're going in way too early on the trade, for example. But that's something that can be fixed. Okay? Those are all things that can be fixed. But we don't know what can be fixed until you record the trades, fill out the journal, and then look over the actual losses. Look at the screenshots before and after, things of that nature. So all of that is important to record while you're backtesting. That's why we do it. Because we want to learn to be consistent. Consistency is what gets you to where you want to be. Remember that you're not doing this for a month, 6 months. You're trying to trade for the rest of your life. Right? So you need to be consistent if you're going to be profitable, at least. All right. So this week we're going to go ahead and we're going to talk about London session trading specifically. Okay. We're going to break down London session for you. So let's hop right into it and let's talk about this. So London session trading, what are things that I look for when I'm trading London session? So the first thing for me when I get into a London session is, number one, you have to be up. You have to understand that trading the London session it's not an easy thing, depending on where you live. So let's say that you live in the East Coast of the US, and London session for us is 3 o'clock in the morning. That's not an easy session to do. and to do it consistently. So you have to be a special type of person to be working the East Coast, or if you're in the East Coast and you're 3 o'clock in the morning and you're trying to trade the London session. Not saying that it can't be done, because it can be done. It's just a different type of lifestyle. If you're in a situation where you're in a different country, let's say, and let's say like you're in the UK, shit, London session for you is like 8 o'clock in the morning, which is awesome, right? But for some of us here in the States, or other places around the world, it could be just a really hard session to trade, because you have to be alert, you have to be awake, you have to be attentive to what's going on at a not so attentive time, 3 o'clock in the morning, 2 o'clock in the morning, you know? So that could weigh in a factor as well. But for me, when I'm trading the London session, the first thing I try to do is I have to identify where I am in the market maker cycle. Okay? For the pairs that I'm looking at, I have to identify where I am in the market maker cycle. I have to know where is it that I am. That way I know whether I'm buying or selling, right? I have to figure out basically the directional bias, right? That's the first thing that I do. Okay? And so a lot of this stuff should already be on your charts to begin with. So this should not take very long to figure out, unless you're looking at like a brand new pair that you haven't mapped out yet. But if you've been mapping out your cycles and you're following the same pairs, you should have a very good idea as to where you're at. Okay? Once I identify where I am in the market maker cycle, I go ahead and I start thinking to myself, how far am I from the closest peak? So if I've identified where I am in the market maker cycle, let's say I'm coming off of peak formation high, right? So I'm looking for sells. How far away am I from that peak formation? So meaning I want to count how many pips away am I from that peak, so I know exactly about a range of how much more I have to go. You know, it's cool to identify the market maker cycle where you are, but then let's say if you're trading pound USD and it's in a 3 times ADR of 300, and you identified, okay, I'm at peak formation, I'm close to peak formation high, and I'm selling, but when you measure it out from peak formation high to where you are now, where price action is, it's like 250 pips, close to 300 pips, right? If you do that and you see that kind of situation, now you have to start thinking about, okay, where is could the next possible peak formation come into play? Okay, it wouldn't be the same is if you identify that you're coming off of peak formation high and you're only 100 pips off of peak formation high, right? You know for sure you don't have to worry about the next possible peak formation because you're just starting a new one. You get what I'm saying? So if you find yourself in a situation where you know what direction you're going in, but then you start measuring from that peak formation down to where price action is, and you're getting close to 3 times ADR, you have to be aware of where could the next peak formation come into play. So start looking at structure, start looking to the left on the charts and go up to a 4-hour or a daily time frame and start thinking about, okay, where's structure to the left on the higher time frame? Where's the next possibility where price action is likely to go? Because if let's say if you go up to a daily time frame and you look to the left and the closest structure is still like another 300-400 pips away, and you're literally out in the middle of nowhere, right, as far as where price action is, you're very likely to probably get a reset, because there's no way you're just dropping down another whole cycle without having a reset first, right? So this is where that comes into play, and you can start to future cast, where price action might go just by looking at the daily and seeing where the big structure is. So where could the next possible peak formation come into play? Always think about that. Now, the next thing that I do is if I know where I'm at and let's say I'm looking for sells, I go to the 15-minute chart and I'm looking at the EMAs. Where are they? Are they above me? Let's say if I'm looking for a sell, are the EMAs above price or are they below price? If they're above price, is it possible to get a setup to where price action goes up and pins an EMA, like a 200 or something, right? Like a type 1, and it pins to the 200 to help confirm the trade setup, you know? So those things I'm thinking about as soon as I go to the 15-minute chart. So I'm already trying to analyze and see what are the possible setups that I could get. What are the possibilities of a setup that I can get? The next thing I do is I just wait for price action to play out. Okay? You have to be patient and wait for price action to play out. Do not be in a rush to get into a trade. Do not be in a rush to get into the trade. Let it play out. Let them show you what they're doing. And that was my next point is let the market makers show you what they are doing. You're not a wizard. You're not guessing, right? You don't want to guess. You just want to let them show you what they're doing. Let them show you what they're doing. You're not here to guess about what possible pattern is going to happen. Let price action show you. It's always going to show you. Okay, look at the TDI. If you're looking at the TDI and it's 3 o'clock in the morning at the beginning of the London session, and the TDI is like all the way at the freaking bottom, right? It's all the way at the freaking bottom. I mean, what do you think should happen? Or if it's tapping the 50. Think about those different situations, about the different setups. You know, if you want to type 3, you want the TDI to bounce off the 50, right? If you want to type, let's say if you're looking for sells and you get a type 2 or type 1, right? We're looking for the TDI to be up at the very top, 60 and above, 61, 62, up to 70, right? So just think about that and put that into perspective. Okay? So what I want to do is let's play out some scenarios here for a London session, and let's see how we do. Let me show you what I do during the London session on the charts. All right, so let's flip over to the charts and let's spend some time getting to know specifically the London session. All right, guys, so let's go ahead and jump into a chart here. Let's go ahead and do let's do Euro AUD. And let's shrink this sucker down. And what we're going to do is we're going to go back. And what we're going to do is we're only going to worry about London session, because if you're a London session trader, right, you're only going to be concerned with London session. So that's the only thing that we're worried about looking for setups in this video is just London session. All right. So let's go back to something where it's normal. Here, let's do this. Let's do March. And then what we'll do is we'll start here at the beginning of this week. And let's open this up here. Perfect. All right, so we already have a peak formation high here, which is great. So we essentially already know, that we're coming off of peak formation high, which is fantastic. So if this is us, right? If this is us right here, and this is, Sunday coming into Monday, we see this. We've already, we've been following this stuff already, so we have it mapped out already here that this is a peak formation high, right? So we already know, hey, we're coming off. We're coming off of a peak formation high, so we're looking for sells, right? You can see here that we've only dropped, it's about 280 pips or so. Okay, so we're not close to 3 times ADR yet. On Euro AUD, I believe it was like 380, 390 or something like that. Close. So closer to 400. So we still have plenty of room to go still. Okay, cool. So I know that I'm coming off of peak formation high. I'm looking for sells. So let's go here and let me make sure all of my stuff is on. It is. All right, let's play this out real quick. Let me advance it to the beginning of London session here. All right, and let me make this bigger. All right, so here is the Asian session, right? And I'm going to click on this via like one candle at a time. All right, so there's your Asian session right there. Another thing, before I even get started, please make sure that you guys have the correct time settings for the boxes. All right, I noticed that on some of the homework, you guys had like the complete wrong timing for the boxes. So please make sure that you have the correct ones, because this will completely destroy you if you don't have the right timings. Okay, so I'm just going to show you this real quick, what you need to make sure is correct on this before we even get started. So the start session here, 20 and 1, 11:30. Okay, if you scroll down, the start of London session, I have it at from 2 to 7. 2 to 7, and the start of New York is 8 to 12. Those are the two big timings that you need to make sure you have correct. All right, so the London session, 2 to 7, and the Asian box is 20 to 1. Okay, so just make sure that those are the correct settings that you see that you have on your boxes, please, because then you won't see the same stuff that I do. And then you'll be wondering, well, why? How come I didn't see that? Okay? All right. So we have a session here. Asian session just ended. And we have price action coming from the bottom, right? 36 pip Asian range. Price is already at the bottom of the Asian range, right? Now, what I'm thinking right now is I look at the EMAs, and all of the bigger EMAs, all of them, they're all above price, right? So for me, this is a really good thing to see, because it allows me essentially to possibly plan for a setup that could happen that pins any of these EMAs, right? So as I'm playing this out here, that's what I'm thinking right now, is because the EMAs are there, they should act as a wall of resistance, and they should allow price to essentially stop at around the EMAs there. But let's just play this out, and let's see what happens here as this plays out. Again, I'm not doing anything. I'm just letting price action play out to see what the possibilities are. Okay. All right. So you start to see price action start to move, move, move. Right. You see how it's starting to pin some of the EMAs, which is great. Right. But I don't consider anything a first leg until we start to get, price action retracements. Right? So meaning I'm not going to consider anything a first leg until it starts to come down. Once it starts to come down, then I'm like, okay, cool. Now we have a first leg possibly. Okay? But until that happens, I'm not worried about first legs or anything like that, because they need to show me first the first leg. All right? So let's keep playing this out here. Let's see. All right, so just notice how he blew right through all that crap, right? Notice how he blew through all of that, all of the EMAs there. Okay, but look where we ended up going to, and we got a railroad track here. That's a pretty big deal, right? Like, why would you blow? Here's my mindset here: is why would you blow through all this crap at 160 miles per hour and then all of a sudden just stop, you know, and all of a sudden just stop? That's why would you do that essentially? And then also now start to look at the TDI. TDI went straight up, and now it's in our range, right? What's in the range of? It's in the range of basically a type 1, right? Obviously, this because price action went straight up, the only option that I would have for a possible sell setup is I'm looking for a type 1. That's it. There's no other option for me right now. The only other option would be a type 4, but that would be against my directional bias. See what I'm saying? So the only sell option that I would have right now in the London session would be to wait for a type 1 setup to develop. That's it. So if you're trading the London session and you get this behavior, the only option that you have right now is a type 1. That's it, right? That's the only thing. Let's play this out. All right, so here we have a situation where you have a railroad track and then you immediately go back up past it, and now you got 1, 2, 3, 4, 5. You got 5 candles there. Okay, if we spread this out a little bit, okay, what are you seeing as, what would you read as a first leg? Would be the first question you got to ask yourself. Where's the first leg at? Okay, is this one the first leg, or is this the first leg? If this is the first leg, this M pattern is going to be like this, right? Whenever you have an M pattern that's like this, basically like uneven, right? That's a bad example, but an M like this that goes above higher than the other one like that, right? When it does that, the one thing that I want to make sure happens is that they don't stay up here more than 45 minutes. Okay? So this second leg here, I don't want it to be more than four. I want it to be shorter. 45 minutes or less is what I want. Okay, because if they're not, you have to think about the reason for this. Okay, the reason that I want this to be 45 minutes or less is because they're trying, if they're really trying to get more people to buy in order so they can go ahead and start selling, right? They're going to have to do this quick. They don't want to spend an ever amount of time up here. Okay? The whole point is for them to get up here and convince more people to go higher, right? Because all the retail traders, all that they're seeing is they're seeing this, right? That's what they're seeing. That's what market makers want them to see or think. Okay? So if that's the case, I don't want this second leg to be more than 45 minutes. If it's more than 45 minutes, I'm not even interested in the trade. Okay? So if this is the first leg here, and this happens to be the second leg, you would have 1, 2, 3, 4, 5, 6. So you have more than 5 candles between the first and second leg. All right? The TDI is up here as well, which is good. You just had a crossover of the TDI as well. The green and red just crossed over. So this potentially has really good potential to be the second leg. So is there a setup here? Well, if there's a setup here, the what has to make sense is going to be the risk to reward ratio. Does it make sense? Yes or no? It's very, you just got to ask yourself the question, does it make sense? Yes or no? And so this particular trade setup has to go 2 to 1 at least, right? So theoretically, you're looking at, you know, somewhere here. Somewhere in the middle of the range is where you're looking at going, essentially. The middle of the range. It would be great if you had a pullback, because then you could do something like this, and then you can use the EMAs as take profits, right? You could see that's 2 to 1 right there. If you don't get a pullback, then you're looking at entering the trade here, and then your stop loss going up here. It's a 26 pip stop loss. On AUD pairs, NZD pairs, you can have a max stop loss of up to 30 pips, depending on, really on 30 pips, it should be more like NZD pairs. But 25, 30 pips, on some of these AUD, NZD pairs is probably going to be, sometimes the thing for you to get because of the pip value on the AUD pairs. Okay, so let's just say that this would be like a 2 to 1 right here to do this. Get to the middle of the range if you don't get a pullback. Okay, now some of you may not see this as a first leg. Some of you may see this right here as a first leg, right? And if that's the case, if you see this as the first leg, then you only have 1, 2, 3, 4. 4 candles between the first and second leg. So this would not even be a trade for you. Okay? So some of you are going to see this as a first leg, and essentially the M is going to look like what I showed you before, right? It's going to look like this. It's going to look like that. Is what that is going to look. But if you don't see this, or if you don't recognize this section here, this 2 bars as the first leg, then essentially this would not be a trade for you regardless, because you don't have 5 candles between the first and second leg. Okay, so let's see if the next candle gives us a pullback or not. You get a little bit of a pullback, not that much. So if we use the pullback, I mean, you're talking like, what, 24 pips now, like a 2 pip pullback, right? So your 2 to 1 is now like here. Basically the same almost, okay? So let's see what happens here. Does this play out, or does it go higher? All right, so we're in 1, 2, 3, 4, 5, 6. So you're 6 candles in, and you're up. How many pips is that? You're up 21 pips. You're up 21 pips. So the 6 candle rule doesn't apply here. Okay, 6 candle rule doesn't apply here. It's okay to let it go, essentially. What you could do is you could go ahead and move your stop loss down to break even. So now it's a no risk trade. So essentially you would move your stop loss from here. You would just move it down to break even to where you entered. Right? And so at that point now, at the break-even trade, no matter what, you don't lose anything. Okay? That's a possibility that you could do as well. I personally, whenever I put in a trade, I'm not even paying attention to it. So I don't ever, it's rare that I move the stop loss unless I come back 2 hours later and let's say price action is all the way down here, and then you move it down to protect profits or whatever, you know. But other than that, for me, I wouldn't be paying attention to this because I don't like looking at the trade itself. But if you're paying attention to it, you can go ahead and move you know your stop loss to break even if you want to. It just really depends on the type of trader that you are. Everybody's different, and that's okay. All right, let's see what happens here. Remember, this is a setup from London. So we're not even talking about the US session. We're just literally trying to see how does this go. All right, so this ends up playing out for you over the entire day. Okay, this ends up playing out for you over the entire day. So this ended up being like a 65 pip at max trade. If you're following it really to the to that 5 EMA stuff after the well, no, it doesn't matter anyways because your target would be here anyway. So yeah, never mind. Doesn't matter. So yeah, so that's one trade that was a good trade. All right. So fine, let's skip on over to next day. All right. So next day, one thing I'm noticing now is that we didn't have yesterday was look at all the EMAs. All the EMAs are now going straight through price. Okay. 63 pip Asian range. All right. But for me, the biggest thing that I see is all of the EMAs are going straight through price. So for me, if I'm looking at this, again, I'm assuming that the EMAs are going to play a role here because they're literally all of them are right there. So I'd be looking again. My favorite trade setup are setups that pin to an EMA. That's just me. Okay, yours as you go through your back testing, you're gonna find your own favorite type of pairs and stuff like that. But for me, my favorite pairs or my favorite setups always have a pin to an EMA. So it's just something that I always look for because I that's something for me that's in one of my rules to take trades on is whenever we can get a pin to an EMA. It's really good confirmation. But anyway, so I look at this and I'm like, the Asian range 63 pips, price action at the bottom here. What are my realistic, what are my possible setups here realistically? Because I'm still looking for sells, right? We really didn't do anything but the previous day we just went sideways if you really think about it. We went up, came back, back down to the low here and then came right back. So I mean, we just literally went sideways. So I'm still looking for sells. So me looking at this and knowing where the EMAs are, they're pretty close to the middle of the range. So for me, the ideal setup would be a type 3 setup that pins to the EMAs. Now, because of where the EMAs are, the EMAs are basically going to have to probably go through price if I want it to be like a real good type 3 setup, right? But I'm also aware of the fact that because the EMAs are here at the same time, that there's a strong possibility that price action may not go to the middle because of the EMAs, right? So I have those two scenarios automatically on in my head right now, and then also the TDI here is already past the 50, which is good. So if price action does come up here, it should bounce off the 50 as well, which is great for confirmation. All right, so let's see what happens. Boom. So there for me, right there is a really good star pattern, right? That's a really good star pattern for a type 3. You can clearly see now TDI is also above the 50, coming back down, almost like basically giving you the hook action there as well. So now, for me, the question is it going to be a viable trade via, how much do I need to risk here for this? All right, so I can look at this in one of two things. My stop loss could go here, or my stop loss could go here. The ideal scenario would be a pullback. Like half the candle pullback would be like the best scenario, because then you would have a trade set up like this. And since you don't have the EMAs in your favor, I could just look to the left and just go back to structure here, right? Just go back to the structure. That would be the ideal setup for me. So I would be looking for a pullback. If I wanted to take this trade here, my stop loss, it should be up here. I mean, but that's a lot of, it's 29 pips. You could put it up here as well, 24 pips, 25 pips. For me, 29 pips, and you're going to be looking at a 2-to-1, which is what? I mean, essentially, you're going to have to ride it to the previous week's low, is what you're going to have to do. Okay? So that would be the setup. If you don't get a pullback. If you get a pullback, you already know what the other setup is. Let's see what the pullback is. Because we have the pattern. It's in the right timing. You have the TDI. Directional bias is good. The risk-reward ratio is there because you can use structure, previous week structure, to get there. The question is, do you get a pullback or not? You do get a pullback a little bit, but not the best. But still, a pullback is a pullback. There you go. So now that makes it almost freaking over 2.5 to 1 risk to reward ratio on it, which is good. So theoretically, you only need to get it to here now, right? Which is still, if you line this up here, look to the left. This is last Thursday's structure here as well. So that's a good setup. Let's see. All right, so this is what? 1, 2, 3, 4, 5, 6 candles. So 6 candles in, and you're at 30 pips profit. So obviously you're well in profit. So there's no 6 candle rule or anything like that here. Let's speed this up, see how this plays out. All right, so I mean, eventually it makes it. It does make it to the previous week's low, but I mean that's like an all-day trade essentially. But you can see you do get to the 2-to-1 risk to reward ratio there. It basically tags it here, but it definitely goes in deeps right here at the beginning of the New York session. So there you go. So that's 2 trades selling. Let's go to the next day here. All right, so looking at this day here, what is this? This is Wednesday. So look at what's going on here Wednesday. Now we've kind of moved down now. You can see that, right? And you can see now the separation essentially out of the, you can see the separations out of the EMAs, which is great. Okay, that's a good thing. Now, what I'm looking for is if I see price action doing what it's doing now, which is basically like striking straight down. I mean, there's nothing for me. This is in between the box, so there's nothing for me to trade here, obviously. But for me, you know, depending on how this goes, I could be looking at this possibly could be a first leg here. If it comes back up again and retest, that'll give you a good type 2 trade that pins to the 800, which is pretty cool. That would be the best scenario, I think, here, because you're also, if you see, look, you'd be getting, by the time this comes up, you would actually have good divergence as well in the TDI, which is awesome. That would be a good confirmation also. That would be the best scenario right now for me that I could think of. Let's see what happens here. Does it get rejected from the 50? Nothing, nothing, nothing. See, there's nothing. So, all right. So this is not going to be a type 2, obviously. What are the other options? What's the only other option? Think about it. What's the only other option that you could possibly get here? That's going to be a sell setup. I mean, just by looking at where you are now. Start thinking about that. What do you think is the best scenario here for a sell setup? I mean, I can only think of one, and that would probably be like a type 3, but this would have to come down to the bottom and then hit the middle of the range, and that would basically pin the 200. But this does not look like it's something that would probably do. Let me see what happens here, because that's really the only thing. Yeah, it's the only thing. Look, I mean, this is the only thing that you could sell is a type 3. It has to come back up and pin the middle of the range. It'll have to pin the 50 and then the 200, and then that would be a sell option, right? This is not a type 3 here because it's coming out of the top and it's just hanging here. That's not a type 3. Okay? A type 3, if it's a sell type 3, we want it to come from the bottom, hit the middle, and then reject. This would actually be a good example if it was a type 3 buy where it was coming from the top, hit, and then went up. If that makes sense. But yeah, that would be the only thing for me to even consider. Boom, there you go. There we go. So there's a railroad track there, right? That would be a good, this could be a good type 3 setup here. This could be a good type 3 setup. I would still, this is trying to hook here on the TDI. The only other thing that I kind of worry about is because now you can see price action is basically between the 200 and the 50, and I have seen before where this just ends up literally just moving sideways, 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 right? I have seen that before where price action gets stuck in the between the 50 or 200 or 200 and 800, and it just bounces like ping pong back and forth, back and forth, back and forth. Let's see. So, I mean, obviously, I know the risk is going to be super good because I mean of where it's at on the railroad track. So, can we get a 2 to 1 and go to the left here of structure? Yes. Look at that. If we could just go back down to structure as a 3 to 1. So, a 2 to 1 is essentially like that. That would be a 2 to 1 trade. If we get a pullback on the next candle, that would be even a better entry, right? So this is one entry here. Another entry would be if we get a pullback, right? And then the other, then that would be like that, something similar to this. And then now look at this. You're looking at 3 to 1 or 3 to 1 risk to reward ratio, and look, a 2 to 1 is like nothing. You see that? That's a 2 to 1. That's crazy stupid. You can actually just go to the bottom here. That would almost be a 3 to 1. But let's see if we get a pullback or not. Boom, we do get a pullback. So then we get a really good pullback. So here's your trade setup here. Just take it to the bottom. Anything else after that is like, you know, free money essentially. So now the question becomes, does this shit get stuck going sideways, or does this actually go or not? But regardless, I mean, you have a good stop loss here, right above, the wick here. You have the 200 here. This is probably going to hopefully act as a form of resistance and prevent price action from going higher and pushing higher. So I don't know. Let's see. Let's see what happens. Oh, up. Okay. Well, I mean that there's another railroad track right there. Which, I mean, if you missed this entry, this could be another entry for you if you missed it. It's pretty late in the day though. But boom, there you go. Boom. Yes, sir. Hell yeah. All right. So this goes damn right to structure. I mean, 6 to 1. Look at that. A 6 to 1 risk to reward ratio on that. 45 pips. Freaking awesome. That's badass. All right, let's pass through this now, because we don't care about the US session right now. All right, so here is. This is what, Thursday. So how far are we? We should be pretty close now. Well, from here to here is what's 4 to 1. So let me just do a quick measurement here. We're about 300. So I don't know, give or take like 80 or 90 pips or so away. But if you see here, if we even on the 15-minute chart, if you look to the left, I mean, there's really no. The only structure is going to be like. Let me put this up so you guys can see it here. Um, so I'm putting it here for this little swipe, and then obviously we have some pings here, and then this would be the last one here down here. So these 3 pins. So hopefully that'll give us some reference there. Okay. So still looking for sells. Yes. All right. So looking at this Asian session, I mean, it's the same thing, man, that I keep telling you guys. I look at this and I'm like, I'm looking at these EMAs, and I mean, there's literally an option for each setup. Look, there's an option for a Type 3 setup to pin the 50. There's an option for a Type 2 setup to pin the 200. There's even an option for a Type 1 that to pin the 800 EMA, right? So we got a lot of different options here as far as a setup goes. We have options, so that's always a good thing to have a lot of options. So let's see what we get. All right, so price action coming here. I mean, breaking below this right here. I mean, what do you think? What do you think about that? Start thinking about what are the possibilities for a sell setup. What would be the only possibility for a sell setup? Think about it. If price action went like this, right? I mean, Type 3 is probably not going to happen. Type 3 would be the only option if it comes back up. The only other option actually would be a Type 4. Would be a Type 4. That's it. Type 3, Type 4. I can't imagine this coming all the way back up to give you a pattern in this little time frame here. So let's see what it does. Wow, look at that. Boom. So what are we looking at here? What are the possibilities What are we looking at? A type 4, right? Let's see, it's really the only option that we would have would be a type 4 pattern. So we have the early move in Asia, which is good. We have the comeback here, which is great. So now what would be essentially the what would you need to get into the trade? Let's plan this out here. Let's put this out 2 to 1. So there's 2 to 1 there. For me, I need a big to get a candle return, right? I need to basically to get a sell candle that tells me, hey, we're done. We're gonna stop here and then we're gonna reverse. You know what I mean? Like for me, I'm not real interested in getting into a type 4 trade like this, right here like this, because this is just a doji, right? This is a good candle right here. This is a really good candle, but the next candle, I want the next candle to be another, like a big red candle or something that tells me that we're done here, essentially. Let's see. Okay, so if you take a trade here, you'd be looking at like a 20 pip stop loss is what you'd be looking at, right? Is this enough to convince you to take a type 4? Would be the question that you have to ask yourself. Here's your trade setup. We already know what these lines are. And really, to go to structure here, which would be the first stop, ideally, would only be a 1.5 to 1 risk reward ratio. So that wouldn't work, right? You would need to go past that. And I mean, now you're looking at some shit like this. But if we go, you have to start thinking about if you go all the way down here. I don't think that's gonna be well over the pip, well over from what you would call it from the high here. If we go back up here to how much is this? So 391, and here's about 345. So I don't know. It's a possibility. It's a possibility. Let's see what this next candle is. This is a decent trade setup. I wish this candle, this red candle here, would be a lot more solid. If this was a nice solid candle, that would be a really good indication. Like if there was a candle like this right here, that would be good. But it's not had a pullback. So kind of iffy about it, but whatever. Let's see what happens here. If that works or not. Does not work. See? I think this candle right here would have taken you out anyways. So maybe that candle would take you out. Let's see. No. So 1, 2, 3, 4, 5. You're probably gonna get out anyways. 6. So right here, this trade would either be a loss on this wick here with the spread. If it doesn't take you out, if it does not take you out with this wick here, then 1, 2, 3, 4, 5, 6. You're out here. You're out at this candle. 6 candle rule. You're either losing 12 or I think it was 22. 12 or 22. So this would be a loss right here. That would be a loss. Let's see how this plays out actually. Or there you go, we're taking you out there either way. So that was not the trade setup there. So in this example here, this is why I would have liked a big red candle here to help confirm, right? Because if you get a big red candle here and then just a little bit of a pullback here, that would be a good entry. But you didn't get that real solid, type of candle here. So anyway, so this is a loss. It's fine. It's a loss. Let's move on. Go to the next day. All right, so next day this is the end of the week actually. So the end of the week, still looking for sells, right? Still looking for sells. Now I'm looking at this and I'm thinking to myself, okay, what are the possible scenarios here for this? Because if you look at the TDI, man. This thing is like in the middle, right? This thing is in the middle. So this right here, like automatically kind of throws me off a little bit because if price is already at the top of the range, and you could see the TDI is at the 50, right? So this doesn't suit me right. Is for one thing for me. Um, so that's one thing right there that I would lose this as a confirmation because this is nowhere near up here. So let's see where this is going here. So it went up. Let's see. Okay. See, so you can see it's pinning. You can see it's pinning to the 200 EMA, right? This one actually went above it a little bit, but it's pinning to the 200 EMA. Is there a first leg here at all? Where's the first leg at? Start thinking about where's the first leg at. I mean, would this be the first leg here, or would you count that as a first leg? I don't know. Doesn't look very doesn't look very organized, right? Um, yeah, it doesn't look very organized. Let me see what the next candles look like. Okay. Let's see another one. Yeah, see, you're almost starting to now come off of that off of the pinning of the 200 there. So I don't see a clear pattern here, honestly. Like you can see an M here, but even if that's an M, like if this is the first leg, you only have one, two, three, four, five. I mean, you can count that as a five candle. Um, that's a pullback candle. I mean, I don't know. It just looks too messy for me. It doesn't look clean, you know? To me, it doesn't look clean. If you were going to take this, I wouldn't take this. I would not take this, even though it's pinning um, to the 200, and it actually came up pretty far actually, 60, right at the 60 range. So I just don't like this back and forth pinning because there's no clear pattern of an M for me at least. Um, you could make one up if you want to. I'm sure you can make this bar here as your first leg, and then you'd have one, two, three, four, five. You know, um, as as your second leg here. But I mean, the setup here would be on this candle for sure. It would have to go above the high here, and 2 to 1. Basically, the bottom would be 2 to 1. 2 to 1 would be like right here. So that would be a setup. Me personally, I would not take this setup though, because it looks ugly to me, and I hate taking ugly M's or ugly patterns, right? So to me, this would not be a setup, but fuck it. Let's see what happens here. Of course, fucking goes. But I would not have taken this for the reason that I just don't like how it looks. I mean, it does go. It goes to. I mean, theoretically, it goes to what, 30 pips? Yeah, about 30 pips or so. But for me, this is not. It's not a good pattern for me. Not a clear pattern for me to trade. So I would not. I would not have taken that trade. So yeah, not would not have taken that trade for me. All right, so on this particular week, I mean, I would have had how many trades? One, two, three, three wins, one loss, because this would not be a trade that I would take. So three wins, one loss. That's it. Not bad. Not a bad week for that week in London. Okay. So let's go ahead and let's pick a different pair and let's do one more week on a completely different pair and we'll wrap this up here. Let's go ahead and do AUDUSD. So let's go to the 1 hour chart here. Let's shrink all this crap up. And let's go over to, let's stay in 2021. And let's do this. Let's do this week here. And all right. Damn, perfect. All right, cool. So, damn, that worked out. Let's go to a 15-minute chart. And we got all the indicators on. Okay, cool. Let's get to a new week here. All right, same thing, right? Same thing as before. I mean, this is a fresh, this is a pretty fresh peak formation low. So our there's our directional bias right there. Is a peak formation low, which is great. Well, we can go ahead and take advantage of that. Okay, so coming off a peak formation low, where are the EMAs? EMAs to me, when I look at them, EMAs like that, is to me they're basically transitioning from coming from an uptrend, basically, right? So you're coming off of an uptrend here, and essentially, if you have a peak formation low here, you're transitioning to where they're all coming together now, and essentially they're all switching, basically to going towards peak formation high, essentially. So, of course, we're looking for buys. Okay, we're looking for buys. So, what does this offer us, essentially, for potential trade setups? When you look at this, the Asian range here, and here, let me finish this Asian range so we know what it is. It's only a 12 pip Asian range, so small, small Asian range, right? And so what are we're looking for buys. What are the best possible setups? Start thinking about to yourself, okay, what are the best possible setups that I would want to come out of this? If I was, if I want the best possible trade setup, what would that look like? For me, it would look, because of where the EMAs are. Again, I'm a sucker. I can't tell you how many times I'm a sucker for price action pinning to an EMA. Right? That's just me. So for me, I would be looking for an ideally like a type 2 pattern that pins its 200, because the 200 is right there at the low here of the Asian. Right. So for me, the best pattern would be a type 2 pattern, pinning to the 200. That'd be great. Probably the thing that won't agree with me is going to be the TDI. So, I mean, for the TDI to be all the way down here at the bottom, you're probably going to end up having to get like a type 1. So let's see what we get here. Again, you're just waiting for them to tell you. Okay, so look what's happening here. What's based off of this move alone, right? Based off of this move alone, what is your only option for a buy setup? The only option for a buy setup is a type 1, right? It's the only option for a buy setup is a type 1. That's it. There's no other option, right? Based on where price action is. So that eliminates all the other possibilities for you. This makes it easy for you. At least for me, it does. This makes it easy for you. So for me, it'd be a type 1. TDI, look now. TDI is all the way down here now, right? Which is great. Now, this right here is a stop hunt candle. You got 1, 2, 3, 3 dojis. I mean, you already know what I'm expecting next. Is I'm expecting a big ass candle, big blue candle, to come up. Ideally, this it would have happened here, but that would have been that 2 doji star pattern there. But let's see, right here, you see that? There's 1, 2, 3, 4, 5. Right here, 5 candles. Here's your first leg. 1, 2, 3, 4, 5. You see that? You see the stop hunt? This is the stop hunt right here. They did it once. They did it again. Where did they do it to? If you look to the left, they did it right where structure was. You see that? Pin, 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 pin. All structure. You see? So this is the end of the second leg. Damn near guaranteed second leg right there. We just need a freaking candle to provide that. There you go. There's your second leg. So there's your second leg right there for a buy setup. So now setup here is what, 11 pips to get a 2 to 1. You're gonna have to go higher than the 800. So if we look to the left, where could we go to? Start thinking about. If we can't use the EMAs to get to 2 to 1, right? Because it's only 1.5. We go higher than that. Well, if we go look, there's structure up here that we can use that, and you can see we can use that to get over 2 to 1. So a 2 to 1 risk reward ratio trade would be right somewhere around there, right? Basically, we're going to structure to the left. Okay, if we get a pullback candle, that's even better. So if we get a pullback candle, that's a way better entry. I mean, 11 pips isn't bad anyways, but I'm just saying you have to remember that the pip value on AUDUSD is way different, and is way cheaper than it is on Euro AUD that we just did. So that's what I'm thinking right here. And we get a pullback, so it's even a better entry. So pullback is there. That gives us a better entry, saves us like 3 pips or so. And yeah, look. Now 2 to 1 is almost to the 800. You see that? That's how much it could change just off of the pullback. There's your profit there. And shit, this thing goes crazy. So even if you had the other one, it would have it would have hit it with no problem. I mean, shit, this ended up being almost a 5-to-1 risk to reward ratio trade. So there's one trade there. All right, still looking again for buys because I mean, again, we're literally coming off of a brand new low, right? We're just coming off of a brand new low. So I ain't even worried about looking for or worried about a peak formation high or anything like that yet. You know what I mean? So keep that in mind. So price coming out of the middle of the range, I'm not even interested in until it goes to the bottom. So now I could be interested in it. What would be the ideal setup here for a buy? A trade out of the edge, possibly, right? A trade out of the edge would be the scenario. I mean, that's that, or I don't know. It's the only thing I could see right now. You do get some divergence here though, because this is way higher and this is lower. So, what would you need to get into this trade? Let's see. So 2-to-1 would be somewhere like that. Something like that would be a 2-to-1 risk to reward ratio. And this is if you're taking this trade as a trade out of the edge. Because I mean, based on how price action is looking right now, that's really the only thing that I can think of. That could give me a trade setup here for a buy. Would be this being a trade out of the edge. So this is the first leg here, and second leg is here. It'd be cool if we get a pullback or not. We'll see what happens here. So we end up getting a pullback, which is great. So it's more like, it's more like a 5 pip, you know, that's barely anything. So, I mean, theoretically, there's there's your 2-to-1 is right there. Like, it's crazy. There's your 2-to-1 trade right there. That's crazy. Wow. And that's because of your stop loss being only 5 pips. So just think about it like in those terms. I know that 10 pips, 11 pips is not a lot, but I mean that's the reason why it's 2-to-1 is because of your um of your stop loss there. Oh, look at that. Got taken out. Okay. Do you see what's happening? Do you see what's happening? So this is we got taken out here. This was obviously not a trade out of the edge. They went down. Here is a stop hunt candle right here, like almost this is like your first leg basically. One, two, three, four, five. Let's see if that makes sense. Yeah. So this to me would seem like just basically a stop hunt going down. Um, I like this behavior here. Pin bar and then a huge pin bar here. I like this behavior. What's the next candle? Next candle is we get a little bit of a pullback. For me, I would take this as a type 1 trade. I know that it's very late and it's 6:45 in the morning, right? So it's kind of late. Um, it's kind of late, but we have divergence. If you see here, from here all the way down, there's, and then here's divergence going up here. So it's like this. It's like that, and then obviously, like that. So you do have divergence. If this is the stop hunt candle right here, and then you slow it down one, two, three, four, five doji candles, I mean, to me, this could be a setup right here. Again, it's a very, you're not risking very much. Um, and now because of that, you can actually use, yeah, you can use it to the 50 as a 2-to-1 risk reward ratio, and that could be your trade right there. So think about the confirmations that you have, or that I would have here, right? I have divergence on the TDI. I got stopped out on the first one, which is fine, whatever. But I do have a big stop hunt here with 5 candles in between the first and second leg. I like this behavior. For me, this is what gives it away for me. Are these 2 pin bars here? Boom, boom. And so for me, I would feel real secure about taking this trade because of this behavior. Okay. Again, that's just me. Doesn't mean that you have to take this trade or not. I'm just telling you what I would do in the situation here, because I know my directional bias is correct. I'm going off of my directional bias. The only way that I'm wrong is if this is going to be like a reset or something like that. That's the only way that I'm wrong. And the first loss that I took was only 5 pips. So we didn't take a huge loss or anything like that. You know what I mean? So even if I take another loss here, we're still under 15 pips for 2 losses. Do you get what I'm saying? So the risk factor here is extremely small, because 2 losses and I still wouldn't even add up to 15 pips to begin with. It'd be like 13 pip trade. So in reality, when you really think about it, it's almost like losing only one trade, because you're only losing 13 pips out of both if that ends up being a loss, if that makes sense to you. So let's see what happens here. Yeah, it's that behavior, man. This behavior right here is what gave it to me. All right, let's go to the next day here. All right, so kind of same thing. I mean, we're looking. I'm looking for buys, and I see the EMAs here, right below it. So my first thing is, if I can get a trade off of these EMAs, that'd be pretty cool. I mean, if it doesn't happen, whatever, it doesn't happen. But I mean, it's definitely something that I would be looking for, is a trade off of this. So let's see what do we get here in London. Spike, another one? No, no. See, it didn't. I was gonna say, if it gave me another spike here, that would have been a good. That would have been good for possibly like a type 2 pattern here, but it didn't. It just kept going down, so nothing. And I mean, this TDI though is looking good though for a possible trade here. And look at that, still going. All right, so what do you guys think? I think this right here can be a stop hunt here. and then boom, second leg here. That's a lot of EMAs too to break through though. I mean, I don't know. You get a W here, W here. Can we get a pullback on the next candle? Yes, we get a pullback. That's a good. I don't know. To me, that looks pretty good. 6 pip loss or 6 pip loss. I mean, shoot. I mean, yeah, a two to one would. I mean, technically, a 2 to 1 would be here. That's crazy to think. It's crazy to think that that would be a 2 to 1. Obviously, not a lot of pips, but that would be a 2 to 1. Anything more than that is like a gift. That's crazy. By the way, this is why I don't like trading pairs that don't have a high ADR, right? So like the Euro USD, that don't have a high ADR. I don't like trading them because 2 to 1 is like 13 pips. So it's good for risk to reward ratio as far as like super low risk with only 6 pips and stuff. But I mean, for for actually like really big gains and stuff is not. So I don't know, but how many candles is this? One, two, three, four, five, six. So here we have a situation where yeah, six candles. So let me take this off real quick. So one, two, three, four, five, six. It's a big ass six candle there. So you're not in substantial profit. So actually, this candle here would you would take yourself out at this stage right here. You would take yourself out right there out of a six candle rule. So this right here would be a six candle rule takeout. So that would be what is that? That would be make it a break even trade because it's 3 pips in profit, but in reality it's just a break even trade, right? So break even trade there. Whatever. Keep moving. And look at that. It ended up being a multi-session. You see that? It would have been a multi-session type one that you could have taken here. Because if we measure this out, the entry would be on this pullback. Yeah, that would have been the trade. All right. So, anyways, let's pull this up here. Let's move. All right. All right. So now that we're in what is this Thursday, and we can see the EMAs are now right above the Asian range, 25 pip Asian range. We're looking at EMAs are right here. So when I look at this, and if I'm looking for buys again, for me, for me, the best setup would be a Type 3 that pins the middle and pins the 50 because you can already see here that price action is already going and escaping outside of this, right? So if the price action holds, if the EMAs here hold price action here, I would expect it to come back down and possibly, tag the 50 and then go. If not, the only other option for me as a buy would be a Type 4. So let's see how this plays out here. So right here, what would you think? You'd be thinking a Type 4, right? The problem is that, um, I don't know, is there a problem? Let me see, would this be, a Type 4? I think that would be a good Type 4 here. You get a little bit of a pullback here, so that's good. So it's more like this, and A 2 to 1 would be something like this, right? So that would be a 2 to 1 risk reward ratio on this. Let's see what we end up getting. Good confirmation with pinning to the 800 and the 200 here. We have a star pattern essentially right on top of the Asian range, and then we get a tiny little bit of a pullback here on this candle. So let's see what ends up happening here. Okay, so we get taken out, and let's see. All right, well, just because we get taken out here, though, check this out, though. Here's what's important. Just because we get taken out here, look at what's happening, though. It's basically coming back, and I don't know. To me, this looks like maybe a second leg. You see that? Because it's pinning to the 50, right? So I'm still looking actually for this. Stopped me out, which is fine, whatever, no big deal. But because it's still hanging around here, this is still a potential type 4 pattern. It just happens to come back and give you another second leg here. So let's see. Boom, right here. You see that? That railroad track right there would be good. So if I'm looking at this as another entry, again here, if you get a pullback, that'd be freaking great, fantastic. Yep. So we get a pullback, so that's even a better entry. So the entry here would be right here on the pullback. Now my stop loss is only 6 pips. And I mean, shit, just to get back up here is over 2.5 to 1 risk reward ratio. That right there is a good trade for me. And you're kind of bouncing off the 50 here as well on the TDI as well. So it did get hit there, so that's good. It actually went higher. So there's a good trade there. And then we get to the end of the week here. So what is this, Friday? So Friday again, looking for buys. I mean, shit. Looking at how this is going right here, could be only option of a type 1 here, possibly. Yeah, looks like it. Wow, look at that. Straight pumps. Oh, man. No way. Look at that big V shot there. We look to the left. Yep. Previous structure over here. Yeah, look at that candle there. Yeah, this is going to be one of those that might not have a second leg. Yep. Yeah, this is not going to have a second leg. So it's not going to be tradable. Nope, not going to be tradable. So there you go. 2 weeks. And let's see, on this one here, we ended up getting 1, 2, so 3 wins, 2 losses, and a break even. So 3 wins, 2 losses, and a break even. So 3 and 2 and a break even. So not bad, right? Not bad at all for a week. And because we did 2 to 1 risk reward ratio, of course, we're in profit. We're in profit. Okay. So this is how I trade the London session. All right. This is how I trade the London session. So let's go back and let's talk about homework. All right. So homework. So I want you to go ahead and just continue to backtest and collect data. The goal is to get to the current price action. So whatever pair you're trading right now, the goal is essentially is to get to where current price action is today's date, whatever that day is, right? October, I think it is right now. So that's the goal. Remember to take your time back testing. Quality over quantity. Quality trades over quantity. Remember that. The whole point of you back testing and doing this homework is because I want you guys to realize how many actually good trades there are versus how many trades that they're not. So you're going to see that the amount of quality good trades, right, are not going to happen every single day. That's the point that I want you to see as you're backtesting and as you're collecting data, right? So please make sure that you do quality trades over quantity always. Take your time doing the backtesting. All right, we're not going to have a test this week. We're going to focus in on backtesting. I want you to continue to backtest, continue to backtest. We're going to be doing this for the foreseeable future. All right. So I hope that you guys enjoyed this week's video. I hope you learned a lot from the London session trading. All right, guys. Thank you so much and have a great rest of your week. We'll see you in the Sunday sessions.